Assalamualaikum and hi everyone. Today, we, the expert partners, are going to deliver our presentations in a topic of equities. But before we begin, I would like to show you the flows on what we are going to discuss throughout in this video. So, the first one, we are going to explain the financial statements and the equity related items. Then, we are going to understand what is equity, the theories of equity, and the components of equity. The components of equity then will be explained in details in the next subtopic, which are in share capital and reserve. Then we move on to the guidance for accounting equity, information to be presented in the statement of financial positions, information that should be presented in the statement of changes in equity, disclosure of statement of changes in equity, and lastly, we are going to summarize our topic at the end of this video. Now, we move on to the subtopic number 1, which is the financial statements and equity related items. In the statement of profit or loss and other comprehensive incomes, there are two components, which is net income and other comprehensive income. These two components then will be transferred to the statement of changes in equity, where the amount of net income will be transferred under retained earnings, meanwhile the amount of other comprehensive income will be transferred under other comprehensive income reserves. When the company consolidates their financial statements, the company should take out the non-controlling interest portion from share capital, retained earnings, and other comprehensive income reserve, then total up in non-controlling interest components. Next, the ending balance of share capital, retained earnings, and other comprehensive income reserve that presented in the statement of changes in equity then will be transferred to the statement of financial positions under equity sections. Again, if the company consolidates their financial statements, the ending balance of non-controlling interest in the statement of changes in equity also will be transferred to the statement of financial positions under non-controlling interest sections. We choose the statement of financial positions of Berjaya Berhad and Aeon Credit Services Berhad as our examples. In these statements, the blue box shows the presentations of equity items such as share capitals, retained earnings, and other comprehensive income reserve under equity sections. This subtopic will be explained clearly in the next slides. For now, I will pass the presentations to Aifa.
Thank you, Izzati, for the brief introduction of our topic. So now, I am going to explain about the definition of equity. As you can see on my left side, there is a slide, right? Okay, so based on conceptual framework for financial reporting 2018, equity is defined as the residual interest of the asset after deducting all of its liabilities. As an accounting student, we already know the general equation, which is assets equal to liabilities plus equity. Hence, to get the equity amount, we must deduct the liabilities from the assets. So the equation would be like equity is equal to assets minus liabilities. Equity is also often referred as shareholders' equity, stakeholders' equity, and also there are few theories of equity, which is proprietary theory, entity theory, and also fund theory. So proprietary theory is based on the principle that business or organization being accounted for belongs to one or more persons thought of as proprietorship or the owners, meaning that the owners own the assets and also owns the liabilities. So revenue will increase the owner's net interest, while expenses will reduce the owner's net interest. Thus, all profit and loss become the property of the owner. The accounting equation for this theory is assets minus liabilities, which we will get equity that is equal to proprietorship. Second theory is entity theory, where the concept is that the activities carried out by an organization are separate or distinct from its owner. Based on this theory, the owner of the company cannot be held personally liable for the debts and liabilities that occurred in the company. Hence, creditors cannot acquire personal assets or property of the owner to settle the remaining debts of the company. The accounting equation of this theory is assets is equal to liabilities plus equity. And the third theory is fund theory, where it highlights a group of assets and related obligations and restrictions governing the use of assets called a fund. So each fund has its assets restricted for designated purposes. So that's why the accounting equation for this theory is assets equal to restrictions of assets. This theory is primarily useful for government and also non-profit organizations. Next, I will pass to Rosalia as she will explain to all of you about the components of equity.
Thank you, Aifa. Now, I will continue the presentation where I will present three subtopics about the component of equity, share capital, and types of reserve. For the component of equity, it includes share capital, reserve, and non-controlling interest. So, the first component is share capital. It consists of ordinary shares, preference shares, treasury shares, and equals. Secondly, for reserve, it is divided by two, which are revenue reserve and capital reserve. And last component, which is non-controlling interest, it only appears for consolidation of financial statement. Okay, since we are very familiar with the preference shares and ordinary shares, I will only explain about treasury shares and equals or irredeemable convertible unsecured loan stock. For the definition, treasury shares represent a company's own share repurchased back from the shareholders and held instead of being canceled, while equals is a hybrid security which has the characteristic of liability and equity that only can be converted to ordinary shares. For the dividend payment, treasury shares are not entitled to receive dividend, but for equals, the shareholders is entitled to receive the dividend as a regular shareholder upon the conversion of equals. For voting right, treasury shares do not have any voting right in general meetings. Meanwhile, equals have the right to vote in general meetings upon conversion. Next, I will explain the differences between revenue reserve and capital reserve. Revenue reserve is a portion of profit earned by a company in normal operation which are then set aside for the purpose to expand their operation. Meanwhile, the capital reserve is defined as a portion of profit which arise from sources other than normal trading activities that have been set aside to provide a provision for future possibilities such as inflation or instability and cannot be used for any other purposes apart from which it is created. Then, in terms of distribution, the revenue reserve can be distributed to the shareholders as a dividend, while capital reserve cannot be distributed as a dividend since it is used for specific purposes only. Revenue reserve are divided into two types, which are general reserve and specific reserve. General reserve are created out of profit and kept aside for general purposes and financial strengthening of the company. It also can be used for any useful reason in the future, for example, retained earning. And specific reserve, on the other hand, are created keeping a specific reason in mind and can be used for its designated purpose. For example, worker compensation reserve. Meanwhile, the example for capital reserve is hedge reserve. I have explained the component of equity. Next, I will pass to Shukri to continue the presentation.
Thank you, Rosa. I will explain guideline for accounting equity. Each company must provide a statement of changes in equity for each financial year by referring to several guidelines. The first one is Conceptual Framework for Financial Reporting 2018 that explain about the definition of equity itself. MFRS 101 will guide us on how equity will be presented in the financial statement, while MFRS 132 will be guided about equity instrument presented in the financial statement. Then, what is information to be presented in statement of financial position? According to MFRS 101, para 54. Non-controlling interest, issue capital and reserve attributable to owner of the parent should be presented in the statement of financial position within the equity section, while on MFRS 101 para 79, an entity shall disclose each class of share capital, a description of nature and purpose of each reserve within equity, either in the statement of financial position or the statement of changes in equity or in the notes. Okay, from now on, we will see each of the disclosure example based on the standard mentioned presented by Berjaya, Genting and LNG. According to para 54, based on Berjaya Corporation Berhad annual report, these are how issue capital, attributable reserve and non-controlling interest are going to be presented in the statement of financial position. For further detail on examples, please have a look at our slide. Fatin, I will pass it to you.
Thank you, Shukri, for explaining well about the information that should be presented in the statement of financial position. Hi everyone, now I will explain to you about the information that should be presented in the statement of changes in equity. According to MFRS 101 para 106, statement of changes in equity should include this information. I will explain it one by giving an example of company which are Berjaya Corporation Berhad and LG Berhad to make it easier in the next slide. Oh yeah, before that, I would like to show to all of you that there are 3 methods to get the total equity in the statement of changes in equity. Let's take a look at the statement of changes in equity Tom 1. There are 8 components which are share capital, translation reserve, statutory reserve, warrant reserve, equity components of ICOs, treasury share, retained earnings, and non-controlling interest. This component then can be divided into either distributable items, non-distributable items, attributable to owner of the parents, and non-controlling interest. So, the first method is we can sum up the non-distributable item, distributable items, and non-controlling interest to get the total of equity. Second method is where we can sum up all the total amount of equities component. And the last one is where the total amount of the attributable to owners of the parents plus total amount of non-controlling interest will get the total equity. Now, let's continue with the information that should be presented in the statement of changes in equity. First, MFRS 101 para 106A stated statement changes in equity should show total comprehensive income for the period and separately show the total amount attributable to owners of the parent and to non-controlling interest. For example, statement of changes in equity LNG Berhad. In this statement, you can focus on the dark purple box where it shows the total comprehensive income for the year, which is 48,851 million, and it separately shows the total amount attributable to owners of the parent, which is 41,568 million, and total to non-controlling interest, which is 7,283 million. As you can see, the total other comprehensive income for the year is 48,851 million also can be derived from the profit of the year amount to 48,955 million after deducting 104 million, while 104 million is deducted from others comprehensive income from the year because it is attributable only to the company. Second information, MFRS 101 para 106B stated that each component of equity, the effect of retrospective application or retrospective restatement recognized in accordance with MFRS 108. This means that if any changes in accounting policy, changes in accounting estimate, and correction of prior period error, it should be stated in the statement of changes in equity. The last information according to MFRS 101 para 106C is for each component of equity, a reconciliation between the carrying amount at the beginning and the end of the period, separately disclosing changes resulting from 1. Profit or loss, 2. Other comprehensive income. In the Statement of Changes 2019 from L&G Berhad, you can focus on an orange arrow where it shows the reconciliation between the carrying amount at the beginning of the period 1 April 2018 and the end of period 31 March 2019, including the changes resulting from the profit and other comprehensive income for the year, which is in a small orange box. Lastly, statement of changes in equity should disclosing changes resulting from number 3, the transaction with owner in their capacity as owner, showing separately contribution by and distribution to owners, and changes in ownership interest in subsidiary that do not result in a loss of control, such as an issuance of ordinary share, treasury share acquired, and so on in the statement of changes in equity from Berjaya Corporation Berhad, as you can see in an orange box. To see more clearly for this topic, I will invite Izzati to explain the disclosure of statement of changes in equity.
Now, we are going to learn and understand the disclosures in the statement of changes in equities. In these subtopics, we divided the disclosures into 5 components, which are share capitals, returns earning, other comprehensive income reserves, other reserves, and special reserve for financial institutions. For now, I will present the disclosures of the first component, which is share capital. The company's share capital may change in the current year due to some reasons, and the most transactions that lead to these changes are when the company issues new shares and conversion of shares. So, in these examples, from the consolidated statement of changes in equity of Berjaya Berhad, we know that there are changes in their share capitals. This is because the company had issued new ordinary shares during the current year. Besides, the share capital of company may change due to conversions to share capitals from compound instruments such as iKURS. As my friend Rosa mentioned earlier, iKURS is a hybrid security which has the characteristic of liability and equity. So, in these examples of Ayan Berhad, we can see that there are changes in share capitals due to the conversions of iKURS to share capital. As you can see in the red box that I highlighted, it shows the amount conversions of iKURS to the share capitals. For your information, the iKURS holder is entitled to exercise the rights of conversions from the date of issuance up to the maturity date, and any iKURS that are not converted by the maturity date will be mandatorily converted into new shares of the company. In addition, same like iKURS, we also have perpetual notes and sukuk. Perpetual notes and sukuk are classified as equity when there is no contractual obligation to redeem the instruments, and they are perpetual in nature with no contractual maturity date. From the examples, Ayan Berhad had issued perpetual notes and sukuk in nominal value amounting to 200 million, and also redeemed the existing perpetual notes amounting to 100 million. We will use Berjaya Corporation Berhad as our examples in order to explain about the treasury share. The amount of shares that the company repurchased from the shareholders will be presented in the treasury shares column in the statement of changes in equity. Based on MFRS 132 para 33 stated that if an entity requires its own equity instruments, then those treasury shares should be deducted from its equity. No gain or loss should be recognized in profit or loss on the purchase, sale, issue, or cancellations of an entity's own equity instruments. The disclosure of the second component, which is the disclosure of retained earnings, will be discussed by Shukri.
Hi, nice to meet you again. As we know, retained earning is revenue reserve. But how to get retained earning? The formula is beginning retained earning plus net income or minus loss minus dividend. Based on Genting Malaysia Berhad statement of changes in equity, these are how return earning being calculated until we get the return earning balance as at 31st December 2019. Based on notes 14, this is how Genting Malaysia Berhad disclose their dividend. Back to Rosa.
Hi, it's me again. I will continue to present the information that should be presented in the statement of changes in equity where the information is other comprehensive income. First, let me differentiate between component of other comprehensive income and other reserve in the Berjaya Corporation Berhad. If you look at the statement of changes in equity in this slide, other comprehensive income reserve consists of fair value through other comprehensive income, fair value reserve, and foreign currency translation reserve, while for other reserve, AFS reserve, employees share plan reserve, warrant reserve, and capital reserve. For consolidation reserve, it is classified into general reserve. Based on the topic of other comprehensive income that presented by group examiners, there are items that may be reclassified or non-reclassified to profit or loss. Let's look at an example of a statement of changes in equity for Syarikat Takaful Keluarga Malaysia Berhad. The non-reclassified item for other comprehensive income reserve is revaluation reserve. First, let me explain what a revaluation reserve is. Revaluation reserve is related to revaluation of property and equipment where a surplus that created from the revaluation of asset, which is the future value of the asset, is more than the cost value. When the company does a revaluation of property and equipment, the amount revaluation reserve that transferred to the statement of changes in equity is 1,181,000. So, when the company does a revaluation reserve in property and equipment and the amount has been realized, it will be transferred to retained earning. For reclassified item, we refer to the statement of changes in equity for Sunway Berhad. The type of reserve is cash flow hedge reserve. Based on the note 44, cash flow represents the net gain or losses net of tax on effective cash flow hedging instrument that will be recycled to profit or loss when the hedge transaction affect profit or loss. So, based on the statement, the amount will be transferred to statement of profit or loss after it has been realized, whether in the same year or in the following year. If you want to understand more on how the item transferred to profit or loss, you can refer to other comprehensive income topic that already presented by group examinator as we use the same example. That's all for me. I will pass it to Aifa. Thank you.
Thank you, Rosalia, for the detailed explanations on other comprehensive income reserves. So next, I will be explaining about other reserves. So first, let's look at Berjaya Corporation Berhad Statement of Changes in Equity for the year ended of 30th June 2019. So there are few components of other reserve in this statement, which are ICOs, Employees Share Plan Reserves, Capital Reserve, and also warrant reserve. But I will only highlight about Employees Share Plan Reserve. So what is actually Employees Share Plan Reserve? So Employee Share Plan Reserve is the grant of shares to employees that eventually acknowledge the employee's role in the organization by inspiring a sense of belonging in that the employees now have ownership rights in the company through the shares. The Employer Share Plan Reserve are often used as a tool to motivate the employees. So there are two ways to implement this plan, which is the first one, employees can be offered shares in the company that they are employed, and the second one is the employees can be offered share in the employer's holding company. Meanwhile, consolidation reserve only occur when the amount paid by the holding company for its interest in a subsidiary company is less than underlying net asset value. Hence, it is classified as general reserves. Let's look at another example in the statement of changes in equity of Syarikat Takaful Keluarga Malaysia Berhad. So, other reserves that I want to highlight in this statement is LTIP reserves. So, LTIP stands for Long-Term Incentive Plan. So, what is actually LTIP reserves? So, LTIP reserve is a reward system designated to improve employees' long-term performance by providing these rewards. So, employee must fulfill certain condition or requirements to prove that they have reached the specific goals in increasing shareholders' value. So based on Note 15, Takaful established LTIP reserve, which comprises of two, which is a restricted share plan and also a performance share plan. So RSP, which is a restricted share plan, is a one-off grant, while PSP, which is a performance share plan, is an annually grant. If you can see on my right side of this statement, it stated that during the financial year, RM 11,041 million ringgit of LTIP reserve are vested. So what is the meaning of vested? So LTIP vested means having an absolute right on the shares. So the employees can enjoy the benefits of this plan if they remain with the company until the vesting expires. So LTIP is designated to not only measure employees' performance but to make them stay in the company. So and there is about RM 17,945 million of accumulated shares granted since 2016 until 2019. I will pass to Fatin for further information on special reserves that only financial institutions.
Thank you, Aifa. Come back to me again. I will explain to you about the special reserve that only exists in the financial institution, which are statutory and regulatory reserve. In the Statement of Changes in Equity 2019 of CIMB Bank, the special reserve is statutory reserve. According to Bank Negara Malaysia, statutory reserve is a monetary policy instrument available to the bank to manage liquidity and hence credit creation in the banking system. The statutory reserve is used to withdraw or inject liquidity when the excess or lack of liquidity in the banking system is perceived by the bank to be large and long-term in nature. Statutory reserve rate for banking institution is 2% of eligible liabilities. In principle, banking institutions must maintain in their statutory reserve at the bank balance that are at least equal to the rate. Second special reserve that only exists in the financial institution is regulatory reserve. Regulatory reserve is the reserve that is set by the central bank or federal government to the bank that will impact on how much loan that bank can give out to the borrower. According to Bank Negara Malaysia, guidelines on financial reporting for Islamic institutions required banking institutions to maintain in aggregate a regulatory reserve of not less than 1% of total credit exposure. In the Statement of Changes in Equity of CIMB Bank, we can see that the portion of retained earnings are transferred to the regulatory reserve for the purpose of maintaining adequate provision for possible credit losses. Now, I will pass you over to my partners, Shukri, to sum up this topic.
Thank you, Fatin. Now, I will summarize all subtopics that my partners and I have explained before this. The first one is definition of equity, which is the residual of asset after deducting the liabilities. Then, there are three types of theory of equity, which are proprietary theory, where owner and firm are identical, entity theory, where owner and company are separate entity, and fund theory, where it highlights restriction on the use of assets. Move on to the next subtopic, which is the component of equity that consists of share capital and reserve account. Share capital is divided into four, which are ordinary share, preference share, treasury share, and ICOLs. While for the reserve account, it has two types, which are revenue reserve and capital reserve. As for the guidance for accounting in equity, we will refer to Conceptual Framework 2018, MFRS 101 and MFRS 132. MFRS 101, Para 54, 79 and 106 is used to disclose information that should be presented in the statement of changes in equity, while for disclosure for each component of equity such as capital share and return earning are already explained in previous slide. We also already learned about financial statement and equity related item, which Izzati already explained in the third slide. There are two components in the statement of profit or loss and other comprehensive income, which are net income and other comprehensive income. This component then will be transferred to statement of changes in equity, where net income will be in return earning and OCI will be in OCI reserve. A portion of share capital, return earning and OCI reserve will be allocated to non-controlling interest when the company prepare consolidation statement. Then the final balance for share capital, return earning and OCI reserve will be presented in statement of financial position under equity. If the company consolidates their financial statement, then the final balance of non-controlling interest in the statement of changes in equity will be transferred to the statement of financial position under non-controlling interest. We hope that the viewer will get a better understanding after watching this video. That's all from us. Thank you for watching.